Let me tell you, there is so much fake news out today, whether it's from President Trump, whether it's from the oil market or the gold market, or whether it's from the Middle East, that you don't actually know where to turn to get the real news. But let me tell you that the news does not matter currently, because the die is cast, as Julius Caesar said when he crossed the Rubicon. It means that whatever happens now is not going to affect the outcome, because the outcome is absolutely certain. That means we are at the end of a monetary era, and that era is going to end as badly as all monetary eras. As a matter of fact, it's going to end a lot worse than any other monetary era, for the simple reason that this is the biggest bubble in the world, and it's a global bubble. We've never had a crisis, a monetary crisis of global proportions before, ever in history. So therefore, it's going to be worse than it has ever been before. Now, whether you get new news about oil or new news about gold, yes, of course it does have a short-term effect on markets and on prices, but it's not going to, as I said, is not going to change the outcome. So what is the outcome then? It's a collapse of the monetary system, which means that the money will die, which means money is going to go to zero in value, as it always has done. It's gone down already by 99%, the value of money, since 1971, when Nixon closed the gold window. And we're going to go see that final 1%, which is a massive collapse, taking place now in the next few months and in the next few years. So whether the Strait of Hormuz will be open or closed, well, it's already predetermined. This is how to read markets. Markets reach a finale, and we are at the finale now, or at least at the beginning of the end of the finale. And that's when we're going to see more bad news than ever. Just take now, in the short term, what's happening. Airports are closing. I just saw today, Sunday, that Liverpool airport is closing. Spanish airports are closing. Planes are not flying. They haven't got any fuel. And oil is priced at around in the $90. Well, the real price is not in the $90. I've just heard a recent price in the Far East of $280. So the real price is a lot higher than the quoted price, for the simple reason that there's no physical oil available for a lot of people around the world now. So prepare for shortages of fuel for your car, of fuel for a home, of fuel for the world's industries and factories, etc. And whatever Trump does or Iran does is not going to change it. The die is cast. So what will this mean? Well, it mean obviously a lot higher oil prices and massive shortages. There were at the beginning of this year oil reserves around the world of about 1.6 billion barrels. That's gone down already by 650 million barrels, and it's going down by another 450 million barrels per month. So we will soon run out of reserves, and when there are no more reserves, that means that the real price will be not the futures price that we see now, which is not a real price. The real price will be what somebody's prepared to pay for a barrel of oil, and especially a barrel of oil that doesn't exist in most places. It would be a lot higher. Oil will go to several $100s. And it's the same with the metals. For example, silver. There are hundreds of billions of ounces of silver that on the futures exchanges that is standing for delivery. But there is no delivery. There's no one who can deliver silver. And at some point in the very near future, and I've talked about this before, silver is not just going to go up back over $100 again. It's going to go to $200, $300, $400, $500. And that could very easily happen this year or even in the next few months, because we're very likely to see a panic. And it's the same in gold. A lot of gold standing for delivery also. You have hundreds of millions of ounces standing for delivery. And again, there will not be any delivery because there is no physical gold available. Only futures contracts that have a value which is massively above the current price. So that's just in these markets. And you can imagine what effect this will have on financial markets. You look at global debt, as I show here on this pyramid. Global debt is probably around 360 trillion. And you add to that unfunded liabilities, and you add to that outstanding derivatives, which I estimate to be the real outstanding derivatives is probably around $2 to $2.5 quadrillion. The Bank of International Settlement is giving the totally wrong figure here. So if you add the outstanding derivatives and the outstanding global debt and outstanding unfunded liabilities, you get to around 3 quadrillion. And that 3 quadrillion is debt or quasi-debt today, and it will turn into real debt. And what will that lead to? It will lead to massive money printing. And as you can see here, you have King Donald is his mistress, Madame de Pompadour Powell, of course not his real mistress, but from history, Louis XV and Madame de Pompadour, when they lost the war against Prussia in the mid-1750s, Madame de Pompadour said to the King, Louis XV, after us the flood. They knew that this was the end of an era for them, and it was France was going to have real problems, financial problems, also, of course, leadership problems, because you got the revolution a couple of decades later. So, and this is what we're going to see in the world here now also. Leaders will be thrown out, wars will be lost, money will be printed, but it'll be worthless money, of course, and therefore the value of money will go to zero, as it has in every monetary era throughout history. So you can see the people here drowning in debt, because there'll be, as I said, unlimited amounts of money printed to save the world, but you can never save a world which has a debt problem by printing more debt. So the consequence will be that money will become worthless. So if you look at the amount of outstanding debt in the world, including derivatives, as I said before, of about 3 quadrillion, and you say that to be a properly balanced system, you should have at least 10% gold coverage against that 3 quadrillion. So in order to have a proper coverage by gold against the 3 quadrillion, you would need, let's say, 10%. Today, there's only $6 trillion worth of gold held by central banks, and that represents 0.2% of the outstanding debt. So if you go to 10%, that means 50 times increase, and a 50 times increase would mean that gold in the $250,000. That's not impossible, because it's not gold going up as we know, it's actually the value of the paper money that's going down, and that's going to go down to zero. So there's no reason why gold couldn't go to $250,000. But it's a meaningless figure, because the real figure is that gold will maintain its purchasing power and probably do better than that. What's also going to happen in the next few months here is that all paper asset markets will fail. Stock markets will start a long-term secular bad trend, and stocks will collapse, and that will start in the next few months, could be earlier. So will bond markets. Bond markets will come down dramatically, because no borrower, whether a sovereign or corporate or private, will be able to afford to repay the debts. Bond markets will crash, and interest rates will go up to at least the 20% or around that level, as they were in the end of the 1970s and early 1980s, and I remember it well. And so don't hold bonds, don't hold stocks, don't hold property. Property is leveraged and is a bubble. You should hold hard assets, and of the hard assets, of course, gold and silver are the premier assets to hold. Hold them in physical form, hold them outside the banking system, hold them in the safest vaults in the world that you can find. We store gold in the Swiss Alps for clients, which are probably the safest vaults in the world. And you should have direct access to your vault, and it should be in countries like Switzerland, possibly also Singapore, where there's safe jurisdictions and stable governments. So please, if you want to save yourself, if you want to save your family, if you want to save your wealth, get out of the paper assets, get out of stocks, get out of bonds, and buy physical gold and silver, and you're going to feel a lot safer than you would be doing if you stayed in these asset classes. So good luck, because you will need the luck, and especially you will need a lot of luck if you don't take the right steps now in the next few weeks. Thank you very much.